Welcome to Spidell's California Minute. I'm your host, Catherine Sedan. This week we're covering how to help clients who never formally dissolved entities. It's not too late to attend Spidell's post-tax season update and review webinar. There are still slots available for the remaining sessions, and you can register at caltax.com under webinars. It's not unusual for clients to form corporate or pass-through entities and never use them, or the business fails and the shareholders or members simply abandon the business. In many of these cases, the shareholders, partners, or members never formally dissolve the entity with the California Secretary of State. The owners subsequently receive a bill from the FTB for the annual $800 minimum tax, plus penalties and interest, which can quickly add up if the taxpayer never filed or hasn't filed for years. Here are some options to help your clients in these situations. California corporations or LLCs that registered with the Secretary of State but either never commenced business or ceased operations but never formally dissolved with the Secretary of State can apply to the FTB for voluntary administrative dissolution. This applies to entities that were not doing business at any time after they were formed in California, or ceased doing business and have filed all required returns for the tax years prior to their cessation of doing business. In these situations, the entity has to have been compliant in filing and paying taxes during the years that the business was conducted. Only entities that have no assets are eligible for administrative dissolution. To apply, taxpayers that have been registered more than 12 months with the California Secretary of State's office can submit either a Form 3715PC Domestic Corporation Request for Administrative Dissolution or Form 3716PC Domestic Limited Liability Company Request for Administrative Dissolution. Before they're approved, the entity is also required to submit all tax returns filed up to the date the entity ceased conducting business in California and pay all taxes, penalties, and interest up to the date the entity ceased doing business in California. Once a taxpayer receives an approval letter from the FTB, it's required to formally dissolve with the Secretary of State within 12 months. If the entity fails to dissolve after receiving FTB approval, the $800 minimum or annual tax will continue to accrue, and the taxpayer will have to restart the whole process. If the application for administrative dissolution is approved, the FTB will abate all outstanding liabilities for the $800 minimum or annual tax and related penalties and interest for the periods that the entity was not conducting business. The related penalties and fees that will be abated include the demand penalty, estimated tax penalty, late filing and late payment penalties, and filing enforcement fee if the demand penalty is abated. The FTB may also initiate an involuntary administrative dissolution process for those California entities that have been suspended for a period of at least 60 continuous months. Prior to administratively dissolving an entity, the FTB is required to mail a written notice to the entity's last known address and transmit to the Secretary of State the entity's name and corporation file number. Although a dissolved entity is relieved of any minimum franchise tax owed, the administrative dissolution does not discharge the entity's liability to any other creditors or relieve the entity's directors, shareholders, transferees, or other related persons from their liabilities, nor does the dissolution impact the Attorney General's ability to enforce any other liabilities. We cover this topic in greater detail in Spidell's analysis and explanation of California taxes, the most complete and best-priced California tax guide available. You can pre-order a print or online version of the 2026 edition at caltax.com under Publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.